Making this video mainly focusing on support and resistance with trend lines, okay, by Club Forex. Everything that I'll be saying on this video, it's just tip of an iceberg. I'm not gonna say everything about these supports and resistance, all these levels. It's just to give you an overview of how we implement or do these levels. So, firstly, what is support? What is resistance? That's the question. Basically, the resistance is on top, and then your support is at the bottom. At the resistance level, this is where we're expecting the market to come, and then when it gets to the resistance level, we expect this market to go down. Support, this market is coming from the top. When it gets to this level, we're expecting it to go up. Understand that these levels were supposed to be in place before you even look at the market. So if you have this level here drawn already, if this market is coming down here, already this is where you're expecting to buy this market. When the market gets here, you're expecting it to go up. Expect this market to come, get here, we buy it. Now, with the support and resistance level, sometimes if you read the notes, it says that support can become resistance, resistance can become support. How does that happen? If your market is here, anything underneath is a support level. This is your support, this is your support. Anything on top is a resistance level. This is a resistance, this is the resistance. Maybe you might have another one right there. That's a resistance level. Why do we say that? Because this is where the market is at this point in time. If the market was here, that means this would have been support, this would have been support all the way down. The market is here. What happens? The market, if it goes up, if it gets to the resistance level, we're expecting it to go down. Keep in mind, this is just pure support and resistance. I'm not going to go into detail. I'm not going to do that, not on a video. During the course, yes, I'll go into detail how we implement certain things. Market comes to the resistance level, we expect this thing to go down. What do? We sell. Point is, we sell resistance. Market comes to support level, we're expecting it to go up. What do? We need to buy. So what does this mean? It means that we buy at support level. Obviously, we need to make sure that we implement or we take in the trade before this thing happens, before it goes up. Because that's the whole point of analysis, to predict the next move of the market. When the market is here in the middle, we call this a no man's land. We're not doing anything. We wait for the market to get to our levels. What happens is this market comes to this resistance level, which was initially the resistance based on this. If it gets here, the market breaks through. If it breaks through, it's here. This is no longer a resistance level, but it's a support level because the market is on top. So what does this mean now, Sander? It means that you're going to have to not trade at this point in time. Wait for the market to get to your level. Market goes up and gets to your level of resistance. What do we do here? We sell because we're saying that this market it's going to go down. We sell at resistance level. Expect this market to come down. Remember, initially it was resistance here. However, it's now support. What do we do at support? We buy. So what do we do for us to buy this market? We're going to have to wait for this market to get to a support level. And when it gets here, what do we want to do? We want to buy it. Why? Because it's at support level, which was initially resistance level. Why do we buy? Because we're saying that from here it's going to go up. Same thing applies. The same thing, the same logic for a sell. Okay. So I'm going to show you this here, and then I'm going to obviously, I'm going to illustrate this on the actual charts, how to implement these levels of support and resistance, how support becomes resistance and whatnot. If I'm going to go to the charts and come here, I've already done these levels. Actually, I can just delete them to show. Well, I'm not going to delete them. That's going to take time. However, when we're reading the charts, remember, we do not read the charts this way. We read them the charts going this way. You'll notice here at the bottom, these are dates. 9th of April, 2020, 10th, 14th, 15th. We read them from this way, going that way. And what we're looking at here, it's USD ZAR, which is at this point in time, USD wants the prices to go up, while the ZAR wants the prices to go down. Currently, this is how the price is sitting at 18.33. Okay, the dollar wants the prices to go down. The ZAR wants the prices to go down, while the dollar wants the prices to go up. So you can take a look from here, from this point in time all the way down here. You can see that the rand or the ZAR was strengthening from here to here. From here all the way up, that was the dollar that was strengthening at that point in time. And keep in mind, if it goes from here all the way up there, What you want to do is you want to take a trade before it makes this move. You need to be able to predict that movement. We're going to get to a point whereby I'll teach you how you take a trade even though the market is in the middle. But that's a bit, late at a later stage. For now, our focus is mainly support and resistance. With that being said, from here, we cannot say this is a resistance or support. It's not quite clear because we can't see where the market is coming from. So at this point in time, I'm not going to do anything. Don't mind this line. The market from here comes down and gets rejected here. Can you see this? And then from here, what does the market do? It comes to this level. Again, keep in mind that support and resistance are areas of rejection. It's where the market goes and gets rejected. That's your levels of support and resistance, or consolidate, meaning that market gets there, gets rejected. That's a resistance level. Comes up, that's a support level. So that's what you're looking for areas of rejections, and not just, market going up, doing that, no, pure rejection, okay? And sometimes what happens is the market goes up and then consolidate. When it consolidate, most of the time, it consolidate when it on these levels, and then it's going to do something what we call the breakout, which is we're going to talk about that at the later stage, or it can come back, which this comeback, we also look at something called divergence. We look at patterns, reversal patterns, but that's at the later stage. But point is, support and resistance level of rejections. Point of resistance, level, support and resistance is where you're expecting to see consolidation. Market comes down, gets rejected here. Support and resistance, it is not a line. Support and resistance, it's a zone. It's not just this line. Support and resistance, it's this whole section. It's a zone. And that's how you plot it. Oh, there's a rejection there. Boom. What happens from here? The market comes here. There's a consolidation here before it breaks through. That's your level of resistance, obviously. From there, what does it do? The market comes all the way up, gets rejected there. That's another level there. What does the market do? The market does a small pullback. Also, you want to make sure that your levels between support and resistance are not clustered. You want to make sure that you give your market enough space. I wouldn't be coming here and put level there. From here to here, there's too much. This is the space between. It's too clustered. You want to make sure that you give your charts enough space in between. From there, then the market consolidates within this level. After that, the market goes up at this resistance level, creates a new resistance level. Can do it like that, and you'll see that all these levels that we've done them based on just looking for this vertical line. We've done all these levels based on this section, but look at how the market would respect or recognize these levels in future. As you'll see, the market comes down here. Here, there's a consolidation happening here, and this consolidation is happening at the support level, which initially was support here, was resistance there. The market comes down all the way. When it gets here, it simply breaks through this support level. What happens, again, I will cover these things during the course, but most of the time when you see such breakouts, it's because of the news. The market comes in all the way down straight, but it comes and gets rejected at this support level. At the support level, which was initially support as well. So you'll see that it's a support level. Support is not a line, but it's a zone. It's a support zone. From here, the market goes up, simply breaks through this resistance level, all the way up. It's at this resistance level. Makes a false breakout. We're going to talk about breakouts at the later stage. That's a topic on its own. And then the market comes back again to this support level, which was initially resistance here. Also, this part seems to have recognized this level, and the market went up again. It's at the resistance level, which was initially support. Resistance, support. Resistance came here. Now it's at the resistance again. It went down. Now the market is at support level. What do? Based on what we've done here, we showed that when the market is at support level, we want to buy it. So without having to consider a lot of stuff or a lot of things, when the market is here, what we want to do is to buy it, because we've noticed that every time the market comes to a support level, it goes up. Support level, it was coming down, it got to a support level, it went up. It was coming down, came to a support level, it went up. It was coming down, went to support level, it went up. Same here, it came down, it's at the support level. What do we want to do? We're predicting that from here, this market, there's a higher probability that it's going to go up. So what do you want to do here? We want to buy it before it goes up, because you're trying to avoid to buy it there. It might be too late already, because the market, when it moves up, comes back and up again. So if you're buying it there, for example, it might be too late for you, because this market might pull back a bit again. If your account is too small, when it does a small pullback, it might blow your account before it goes up again. Point is, this market is at support. What you want to do is you want to buy it while it's here. Why do we buy? We buy because we're saying it's going to go up. Okay? So if it gets to the resistance level, this is pure support and resistance without having to consider any other factors. If it gets to this resistance level, what do you want to do? You want to sell it because it's at the resistance level and you're saying that it's going to go down. Like I said, I'm not going to talk much about breakouts, this and that. This video is not meant for that. This video is meant for when the market is at support, buy it. When the market is at resistance, sell it. Simple as that. So here I've also illustrated how support can become resistance, resistance can become support. Like I said, just a typical example is here, this market was at resistance, it broke through. However, this resistance level, remember it's a level like that. However, this resistance level, which was it's a resistance here, when the market broke through, it's no longer resistance here, it's support because it's underneath. Do you see what I mean? So I'm not sure if I should be saying this, but I'm just going to move back a bit to validate if these levels of support and resistance that we've done are correct. Don't, like I said, I'm not going to go into detail on these charts. This is just an overview. You'll see here this market made a false breakout, which is the resistance level, and how this market here recognizes this level. It's a false breakout. You'll see here the market was coming up. It's at the resistance level, struggled to break through. So the point is, the market will always recognize these levels or respect these levels of support and resistance. I'm not going to talk on this video how to make sure that they are correct and all that perfection. I'm not going to get into that detail. So, but then how you validate these levels are correct, you're scrolling back. So what we're looking for rejection within these levels. However, it seems as if for quite some time, it's been a while that USD has been to this price level. And obviously this is mainly because of the coronavirus. It's the first time actually the USDs are hitting 19 Rand 40. So obviously the market going high so rapidly is because of the whole coronavirus. And then let's talk about a bit about trend lines. I try not to make this video to be too long. We have three types of trends. We have uptrend, downtrend, and sideways trend. Okay, so what you see here, it's a market going up, and you can see that we call this an uptrend. It's going up. And how do we draw the trend line? We draw the trend line underneath. Okay, and then on the other side, let me not take all the space. Up, pull, up, pull, up. So this is your uptrend, okay? And we draw the trend line underneath. And then for a downtrend, down, pull back, down, pull back, down, pull back, down. And then we draw the trend line on top. This is a downtrend. And then we have a sideways trend, which is moves sideways. It's more of consolidation market. And that's how you do it. So in an uptrend, we want to buy. In a downtrend, we want to sell. In a sideways trend, you can do both. There's a way of doing it though. Like I said, I'm not going to say that on the video. But the point is, in an uptrend, we want to buy and we draw the trend line at the bottom. In the downtrend, we draw the line at the top. Okay. The question is, how do we know that this is an uptrend? We call this a high, this part, and then this one is a low. And again, the market, what does it do? It went all the way up, created a new high. Do you have a high before this? Here it is. Is this high higher or lower than the previous high? And it's high, which becomes a higher high. And then here the market comes down, creates a low. The question is this low lower or higher than the previous low, which is this low, it's higher than this one, right? It becomes a higher low. The market goes up and then creates a high again. The question is, do we have a high before this? Yes, we do. Here it is. Is this high lower or higher than the previous high? Yeah, man, this high, it's higher than the previous high, which becomes a higher high. Here we have a low. Do you have a low before this? Yes, here it is. Is this low higher or lower than the previous low? Well, it is higher, which becomes a higher high. And that's how we identify or describe a trend. It's an uptrend because we have a series of higher highs and higher lows. For a downtrend, we have a low here. Do you have a low before this? We can't tell. We have a high here. Do you have a high before this? We can't tell. We're looking for a rejection. And here we don't seem to have a rejection. What does the market do from here? It comes down. It creates a low. Do you have a low before this? Yes, here it is. Is this low higher or lower than the previous low? And it's low because it becomes a lower low. And then here we're having a high again. Is this high lower or higher than the previous low? It is low. It becomes a lower high. The market comes down, creates a low. Do we have a low before this? Yes, we do. Is this low lower or higher than the previous low? It is low, which becomes a lower low. Here we're having a high. Is this high higher or lower than the previous high? It's low, which becomes a lower low. And that's how we say that it's a downtrend, because we're having a series of lower highs and lower lows. Here we are having a sideways trend, which is it just has a high, has a low, high, low, high, low. It's a sideways trend. Okay. That's how we plot, we do our trend lines. And that's how we trade with the trend. We would say that in an uptrend, you want to trade, you want to buy only because the market is always going up and there's more odds of the market going your way when you're trading with a trend. If it's a downway, it's a downtrend, you want to sell this market because there's a higher probability that your trades will go your way. Even if you look at this market from here to here, if from here to here, it's 50 pips, which is yes, we've spoken about that. If from here to here it's 50 pips, but from here to here it's about 100 pips. So you will see that when you're selling, as compared when you're buying, selling, there's more reward into it than buying, because obviously you want to buy this level, you want to sell this level, you want to buy this level, you want to sell this level, you want to buy this level, you want to sell this level. But look, every time you buy, your reward is smaller as compared to every time you sell, your reward is much bigger. So just to make this clear, in an uptrend, pull back, up, pull back, up, pull back, up. What I'm saying is, if you look at this point, obviously this is your resistance level, it's at the highest peak. And then if you sell here, you're going to get out here. But look at the distance as compared to if you were to buy here. Look at the reward. It's much bigger than compared here to here than this to that. So even here, if you sell, the reward is too little, because from here to here it's about 50, from here to there it's about 100. So you'd want to always want to buy in an uptrend, which means you're trading with the trend. And how do we draw a trend line? We'll draw it up like that. And you'll notice that every time the market touches the trend line, it goes up, which is in this case. You'll wait for the market to come to this trend line for you to buy it. The critical thing in the forex market is to wait. If the market is there, you have your trend line all the way straight. You wait for the market to come to a trend line. When it gets to your trend line, you'd be interested in buying it. Here, to trend line, when you hit your trend line. Also, I don't want to say this, but you will see that it's when it hits this trend line, it also complements the support level, which is, you have two factors that makes you to decide to buy here. It's because this market is at your support level and it's at your trend line. Same thing, this was your resistance. You drew all the way straight, the market comes down, it's at your support zone. It's also hitting your trend line. That gives you factor to buy. Same applies here. This market came, it was a resistance level, now it's a support level. this market comes down, hits your trend line, hits your support level as well, then you can buy. So you have two factors that makes you decide to buy. There's more factors to consider or we look into, but I'm not going to be recording that on the video. This is just an overview, okay, of what we've covered during the course, just to make you don't remember certain things. This is just a glimpse, okay. I'm not going to go into detail, like I said. So if we come here on the actual charts and we look at these trend lines, we will see that obviously on the actual charts it's not going to be as straight as it is or it was on the drawing. However, from here to here, you'll see this market is going up. This is called an uptrend. Okay, I've zoomed my charts a bit, so they're a bit clustered. So how would I do my trend line? I would use this trend line and then connect the lows. Settings. So when you're doing your trend line, this might not be perfect, but I'm interested in connecting the lows. In this case, maybe I were to connect this low and that low right there. So the market went up, it broke the trend here, false breakout comes in, it broke the trend here, and you'll see that it was an uptrend. How do we see that the trend has changed? The market has to break the trend, and from here this was a false break, it went up. However, here it's clear rejection that the trend has been broken right there, which means now a new trend is about to start. Also within this trend, we had a sideways trend here, if you agree with me. Sideways trend is when this market was consolidating. I just have to use a different color. I'm going to come back. However, from here, we had a downtrend like that. So what I'm doing is I'm connecting this this high and this high. And you'll see what happens in that high. The market went up here and the market broke the trend. It shows that the trend of a downtrend is now finished. The market is going up. It broke that trend, but it was not. It broke that. It broke that trend. Again, if I were to connect lows, I'm going to connect this low, which if I'm connecting this low, there's no other low that's clear here. So if I'm connecting the low, I'm going to connect this low with this one, like that. If that makes sense. But it should make sense based on the course, based on what we're covering during the course, not on this recording. I'm not going to make things, glooms and whatever on this recording. I'm not going to do that. Here we're having a clear, I'm just going to delete those lines. Here, you can see here you're having a market that's consolidating. For this description, I'm going to try to make it as perfect as possible. This is a consolidating market here. It's not going up, it's going sideways. It's a consolidation chart, or trend. It's a sideways trend. Just look for a perfect example, which is I shouldn't be bothering myself by making that. Here, again, if I were to make a sideways, an uptrend, I'm going to connect this low and that low. Sorry. And you will see that at this point in time, we have a breakout here, which means that the uptrend is now finished. A new trend is going to start. And there it is, this market started going down. How do I draw my trend line, my downtrend? I'm going to connect this high with this one, like that. And then here, I can see that this market broke my